Well, good afternoon, good morning, everyone. I'm very happy to present this very well expected webinar. We'll be talking about inheritance and donations today. And as an introduction, would like to tell you that there's a lot to talk about inheritance donation. I will certainly do not have enough time to cover everything, but we'll cover the basics, and obviously we can have follow-ups, calls, and emails later on. We do organize very often webinars online on two different topics related to French and US taxes. So be sure to look up into our website or into the social network about the different webinars. There may be a session 2 follow-ups on this one. As an introduction, also reminding you that the current law in France is evolving. As you know, France is among the two only countries in the world taxing at the highest rate inheritance and donation. To be fair, there were a couple talks in the budget for 2023 that decided to change the law about it. But because there's a lot of debates currently in the parliament in France, this law was pushed off to a later date. So for now, the rules still apply, but things can change in the near future. Disclaimer, which is a standard page I'm sharing with you here about general information. And again, we'll be covering general information together. And as I said, there's a lot to talk about today. I want to share a little bit about my pedigree, my background, who I am, what do I do. So licensed in France, in the US, and Canada. I help a lot of international clients. I'm myself French and American, and I have a firm called Monceau CPA, where we help out the clients for their personal and business needs. And aside from that, I do a little bit of politics because I'm also a deputy mayor in my town next to Paris. Given that we just said that, now we're going to go straight to the point into the different topics, into the menu of today. So we cannot talk about anything related to tax in France without basically understand what are we talking about when we talk about French income tax. So we have to talk about it, and we'll go over it. Some of you guys know about the French complicated income tax system. Some don't. So this will be a great introduction. And then we'll get into basically the nitty-gritty of what you guys are expecting. What happens if I'm residing in France and decide to, live permanently in France, and I want to give out money to my here, or if you don't reside in France, but you have French assets, or you bought an apartment or anything here, what's going on? We'll talk about a will as well, setting up a will, testament called in French. Would appreciate if everyone can be put on off. If you can mute, all of you guys, your microphone, that would be great. So we'll talk about that. We'll talk about trust, very hot topic in France, especially when we talk about international and Americans, very popular in the US, not necessarily in France. And we'll talk about us, what we do, and how we can also answer all of your questions. About 20 questions were received prior to this meeting, and hopefully the presentation will address those. All right, so moving on to the next page, which is basically understanding the income tax system in France. As I said, critical to understand the next chapter of the PowerPoint if you don't understand these pages. So the main topic that a lot of people get it wrong is right here. What does make one person a fiscal resident in France or not? So a lot of people believe it's all about the 6-month or 183 days rule, which is kind of correct, but it's not very well labeled this way in the tax law. So you got to be cautious because any of those criteria here can be easily met. And if those are met, any of them, you are by default a French tax resident. So you got to be cautious, right? When we talk about, well, I have my house in France, I have friends and family, I work occasionally in France, but I don't spend 6 months a year in France, so I'm not a French fiscal resident. So it's very critical to keep that in mind. And here you have basically what the law states about what does make one a French tax resident. It's clearly laid out. We know about the 6 months rule. We know about the travel, which if you travel around the world and you decide to spend the majority of the time in France, even if it's less than 103 days, if you carry professional activity, if you have your main economics interest here in France, if your place of abode, if you call home France, or if your family is located to France. Now, some people will still tell me, well, I do have this criteria in both countries. Well, it cannot be because at some point you have to be resident for fiscal purposes in either country, France or the other home country. So there are ways to tie break the decision of you if you are not a French fiscal resident, but at least here you have a better understanding. And that is key to the next chapter because, again, we're going to be talking about either you're a French fiscal resident or not. And remember, in this presentation, we're going to be placing yourself as if you were receiving the money, right? We're going to talk about those that are giving the money, but the most important thing is whoever is receiving your money, your kids, for example, they're going to be paying taxes on. So those also are related criteria. Now, how does the French tax liability works? You have here the different system, whether you're resident or non-resident. Another reason to fully understand why it's important to understand the concepts of fiscal residency. And then if you are taxed, you have your tax on your entire family, your income tax on worldwide income. Yes, it's different like in the US where you are being taxed worldwide. But in France, they need to know what you're making elsewhere. And we'll talk about it in a minute, given that there are double tax treaties between a couple countries, between France and the US or Canada or the UK, for example. But we have about 125 double tax treaties that usually protects the double taxation. We'll talk about, we need to know about the bank account disclosure. It's very important, similar to the FBAR we have in the US. And then we have about the occupancy tax and property tax, although the property tax is now about to be waived, but at least and the wealth tax. Very important if you have a trust also, the wealth tax has a huge impact on it. For the non-resident, it just summed up to whatever you have in France. If you have a property, you have something, you probably have property tax or occupancy tax, and the wealth tax will only be computed on the assets that are located on French soil. Now, very important also to understand the double tax treaty. As I said, 125 countries have signed an agreement with France, and it covers a lot of things, the personal, the corporate, the social, the capital gains, but it does not cover wealth tax. And that means you will not be protected if you have assets in France. And inheritance, there are very complex tax rules, indeed. And we'll get into writing. We'll get right on it right now, okay? So that's basically what you need to know about income tax. Now, transition-wise is what are we talking about? What are we talking about when we mention the terms inheritance and donation? Well, in French, it's not called inheritance, it's called succession. You also have this name in English, but at least you understand. So very important to understand that when you deal with several nationalities, so you're French tax resident with a UK passport, a US passport, you need to understand the consequences ahead of the game, right? And we talk about international succession or inheritance when there's two passports, so two countries involved. So that's very important if you have heirs to plan ahead, and that's what we tell you as financial advisors, to plan as much as you can, not only because the law evolves, but because your situation evolves and things can be different. Also, because sometimes you get into a dispute mode with one of your kids, and then 10 years later, you change your mind. So it's very important to keep that in mind to avoid inheritance issue upon the death of a loved one, which unfortunately is very current, very often happening when you have things not being cleared from the get-go. So let's talk about inheritance and let's talk about donation. You have there the definition, and I'm sure as I speak, you can read through those and basically understand what are we talking about. So inheritance is basically, the procedure that will allow the notaire, which is kind of the lawyer in the US, but notaire has a very specific role here, to dictate, to settle the inheritance, your wealth, okay, upon the death of a loved one. And you have to understand that whether you did a will or not, there are rules in France that you must follow, and the inheritance and the notaire through the notaire will be kept and will be honored and will be respected. And those are the rules you need to know. The same also applies that in the assets being given away through the inheritance cannot be transferred unless the tax duties have been paid by the heirs. We hear oftentimes on the news that the wealth, the patrimony that somebody had was too big, the inheritance was too big for the descendants, for the daughters and for the kids to handle just the tax on it, right? Because remember, you own, let's say, 10 buildings are worth 20 millions of euros. And on that, you're probably going to have to pay half or a little bit less than half, 45% of taxes. Some people don't have the liquidity and the cash. So it's a big problem because you then have to sell sometime the asset to pay just for the inheritance tax. So it's a big thing to really schedule ahead with the numbers and the potential figures. A donation is a complete different topic. Donation is occurring only during the life of the person. So a person can give at any point given, and we'll talk in a minute, a certain amount of money that are taxable and not taxable to family-related members, and declaration must be done, right? An obligation to declare what happened there in order to ensure that the tracking of how much donation, how much money have you given during the life is well tracked. All right, now let's get into if someone resides in France and he has worldwide assets. So let's say I'm an American, John Doe, decided to live in France in the early 2000s, been living here for 20 years. What happened? What happened to Jane that comes from California 3 years ago during COVID? She decided to settle in France. So I'm giving you already an introduction of timing, right? So some of the timing is more than 6 years, others are less than 6 years, right? So very important to keep in mind those thresholds. All right, so what happened for the person who deceased as a French resident, and what happened to his or her income? Okay, once again, put yourself first as the person who passes away, what that person happens to his or her assets and the income related to it. And then the next item is, and we'll talk in a minute, what happens to the family members that are picking up the inheritance for that person. So as you can see, theoretically, if you become a French tax resident, then everything that you have in France and even worldwide should be taxed in France. Now you're going to tell me it's not possible because I have assets located in the US, for example, and I often take that example. How France is going to tax me on assets that I don't have here, I've never had in France, and basically worked my whole life to have and acquire while residing and working in the US. So there are ways to avoid the taxation of those assets not located in France. One of them is the first 6 years exemption rule, as laid out here on the left, but also the fact that there's a tax treaty between France and the US that summarizes that any asset located outside of France cannot or should not be taxed in France because it's supposed to be taxed in the US, right? And that's basically the different layers of the inheritance tax rules. So let us be clear. By default, if somebody is a French fiscal resident, he should be taxed. I mean, he's here at tax on everything he has in France and outside of France. Okay, that's what the law says. However, given that there were tax treaties signed between, for example, France and the US, then the assets being taxed are going to be purely in France, so long as you can prove that in the US, your asset has been taxed there, right? So that's something to keep in mind. Now, very important thing, I know some people have already have questions. Maybe we'll talk about questions at the end, but very important. When we talk about assets, up until 5 or 6 years ago, the rule was different if you had physical assets, intangibles, and tangible assets. So physical assets are building, houses, apartment, homes, and non-physical assets, intangible assets, such as money into the bank, right? Stocks or IRAs and so on, right? So the rules used to be different. For now, the rules are completely together. That means when I said everything that you have and own in France will be subject to French tax, is obviously all the money that you have here, cash in hands, and all the physical assets that you have. All of the money located in the US, and as well as your patrimony, which is mainly your intangibles, your apartments, building, and houses, and so on, will be taxed there. And again, we are saying these things in an easy way, but a notaire will never tell you this way. Why? Because a notaire will tell you we have to dig in, we have to look with our counterpart in the US, we have to ensure you're submitting the proper tax forms in the US, we have to ensure that you are subject to some tax there. Now, we all know in the US, the threshold is $11 million, which is basically a very higher amount of money, so that you won't be paying taxes there. But that is the key point here. It's not because you're not paying taxes there, because the threshold is higher, that ultimately you need to pay taxes here. All right. What it means here is the tax rules of the country where the asset is located is honored, is applied. And that's basically what's happening here. And again, the law is evolving, but that's what it seems to be as of now. Okay. Now, I'm not going to talk about what happened on the right here, the deceased income. It's just compliance-wise. It explains to you what you need to be done if somebody passes away, the tax returns and the tax forms to fill out. But there's very important information in the bottom of the page in the box where it says, and that came out in 2015, but the rule was elected in 2012, but it only started in 2015. It's called the Règlement Européen, the European regulation. Everybody should know about it, and I don't think a lot of people know about it. It basically tells you if somebody passes away in France,
I found a few places
and
near you.
he is a US citizen.
The mic's off.
Oh, sorry. And he is a US citizen, that person can elect which country is dictating the inheritance. So basically, if John Doe passes away in France, because he was a US national as well, he can tell his notaire, his wife is the survived wife can go to the notaire and say, hey, hold on. My husband, through the notaire while he was living, very important, in his will or through the notaire, elected to be treated his inheritance according to the law of the US. So that basically dictates how the succession, how the inheritance will be handled. Okay, so if you have children, no children, where does the money go to? But two important things: it will not change the tax implication related to the inheritance. It's just for civil matter, right? But why does it have important civil matter? As I said, it has an importance because sometimes people want to allocate different amount of money, and the US is more flexible to that than the France. The only clause, the only reason why France will not respect or honor the decision of applying the US civil law if one US person decides not to transmit, to inherit one of his or her child. In France, you're not allowed. All the children should be getting something, perhaps not equally, but something, right? So that's important to keep in mind if you decide to make the switch. Moving on to the next one, so at least we can carry on. So the next item here is basically how much are we talking when we talk about tax rates? And that is the key page here that everybody should know about. I would start with the bottom one. The bottom one tells you that if you inherit, you're inheriting 50,000 from someone, from your father or your spouse, then there is no declaration to be done because that's the threshold minimum, okay, upon a passing, okay? And if somebody is picking up only 3,000, then there's nothing to be done, okay? In any other cases, a declaration may be done, okay? It was important to tell you the minimum threshold. Now let's get back to the bottom part, the top part of the slide. The top part, as I will explain to you on the left side, obviously the surviving spouse or the PAX, which is a common union in France, is exempt from inheritance tax. So folks, if you're married or if you're not married, now is the time to get married, right? To ensure that whoever your partner is will not be taxed inheritance, okay? Even if you live together for 30 years, if you're not taxed, then it's around 2 weeks ago, I went to an elderly home, and as I'm a deputy mayor, I celebrated a wedding of someone who was 80 years old with his girlfriend for 40 years, but they were never technically married. And now understood the term of the law that basically said if you see yourself, being in a bad position and you might pass away, then make sure you are at least married or taxed to avoid inheritance tax for the surviving spouse. You have on the left couple reason or couple cases where you will be exempt, but on the right, that's the most important thing. You can see here the different threshold, and you can see if you have more than 1.8 million of assets, we said physical or non-physical, intangible or tangibles, then 45% tax. That's huge, right? All right, so it's very important to understand those things. And if somebody is giving away money to a friend that is not family related, as you can see all the way in the bottom, 60% of tax withheld from this inheritance. So it's a huge thing. Obviously, a question was asked for me, if we give it away to Red Cross or a non-for-profit organization, then obviously those ones are exempt from paying the different taxes related to inheritance. So those are the table you would need to really have. Now, let's talk about donation. Donation, who can give to whom? Well, you can give to anybody. But if you give to family, and you can see parents, children, grandchildren, or nephew, nieces, then there are obviously advantages. There's a 15-year rule, right? Meaning that if you give away money, every 15 years, the allowance that you will see on the left is back to zero, right? So the earlier you give it to your kids, the better it is. And you can see here in the example of a child receiving 200,000 euros from his parents, and then another 31K from his grandparents, because that's the maximum. Then you could get exemption. So that's very important to keep in mind to anticipate, when you have young children or young grandchildren, to give away money, at least in the bank account, and you can put on a sealed bank account under their name, money, so at least they won't be taxed on it. Now, either way, there's an obligation to declare. Very important that there's an obligation to declare either way. Now, two important things, obviously within 30 days, as early as possible, in order for the kids to be enjoying as much as possible. Another element, as you can see on the left, you can see the difference allowances threshold. The second line is not translated correctly. It says small child, is just grandchild, as you can see, second line on the left, which is 31,000. So a grandmother can give up to 31,000 euros to his or her grandchild. So that's basically covering up for as donations to as a French resident to another French resident. Now it's important that if you don't reside in France, as I can see here, the average age of the crowd today is about 25 to 30 years old. You would have to put yourself, as I said, in the recipient position. The recipient position is the one paying and the taxes and submitting the related tax declarations. So if you reside in the US and you have children in France, then and they are fully tax resident, they will have donations requirements to honor. If it is the opposite, you reside in the France and your kids live in the US, then this declaration does not apply to you. It only applies to the recipient. So the recipient, if the recipient is not a French resident, then there's nothing to be doing here at this point. And that is a great transition to the next item, which is, if you reside abroad, and which for some people it is the case now, what are the consequences for your children that are, living in France? So first of all, if somebody dies, unfortunately, and has assets in France and assets in the US, so France has no business in your assets beyond the ones that you have in France, right? Nothing. And it's clearly laid out here in the text. You can see that everything that is, in France, subject to tax in France, end of the story. If you have things abroad that nobody cares, your home country, wherever you are, will dictate basically the different taxes to be paid. Okay, so in a sense, and you can see that in the bottom, inheritance tax will have to be paid in France when the deceased is tax resident in France, the heir is tax resident in France, or the transferred movable or movable property is in France. So it's very important to understand that if somebody passes away, is not a French resident, and their heirs are not French resident at all, so nobody is French, nobody resides in France, but they have a castle in France, so a wine in France, field of wine field, then obviously that asset will be subject to French tax declaration and French inheritance. Now, how can we prevent that, or how can we anticipate all of those discussions we talked about? Setting up a will, which is very common in the US, less in France, because about 80% in France of people are not setting up a will through a notaire, they're doing themselves, and only 50 of the population set up will. So whether you do it yourself or through a notaire, I highly recommend you to set up a will, because the will is a very beneficial document, and we'll see about it. First of all, what is a will? I'm sure everybody knows about it. It's an act by which the testator, which you are, if somebody is elderly and wants to prepare himself for the next journey, then he or she writes everything that is not revocable. When you can change your mind, but once it's executed upon the passing of the person, then it's not revocable. Okay, and it allows you to prepare for the next journey, to lay out everything. If there are, complexity or complex relationship within the family members, it's a great way to avoid any, unclear situation. Okay, so as I said in the right, a French will can be done by yourself. Yes, it's free of charge, but it can be disputed. Okay, it can be done through a notaire, as you can see, but it cannot be disputed. High fees, yes, you will have to pay for it, but it might be worth it. Notaires are the only ones entitled to prepare French wills. Unfortunately, if you come to me, I will not be able to help you unless you just ask me to help you out with the standard wording, right? It's better to do it at the notaire. Now, let's say somebody has a French will and a US will. So which one will follow? Let's say somebody has a US will and didn't bother doing a French will. Which one will follow? So either way, if you have a French or US will, we'll follow the French civil and tax rules, because remember, unless you have elected the European regulation to tell the notaire ahead of the game, I want my home country, the US, for example, to be dictating my French will, by default, the will in France upon passing will be, the rules will be following the French rules, okay? Either way, the latest will version is the one unforeseeable. So if you've done a will in the US and 30 years later, you haven't updated it and you do one in France, and then something happens to you, the French one is basically the one that is that will be followed. Now, trust, very hot topic. I know a lot of people are confused about that, because it is confusing. That's true. First of all, there is no recognition of foreign trust. I mean, we talk about trust when it's from the US, but we have trust in Australia and many other countries, right? So trusts are not recognized in France. So there's no notion of trust in France. Okay. So for France, it's just treated as a normal donation, during the life of the person to the beneficiary, and the proceeds of the trust, once it's executed, sometimes it's executed upon the passing of the initiator. Sometimes it's executed when settled whenever the person achieves a certain age or goal. It will then be, as I said, either treated as inheritance or donation. Okay. Now, a trust, is something to look upon again from the beneficiary, because the beneficiary is the one who has obligation to declare. The one creating the trust has basically nothing to be worried. But again, we're here to talk about both sides, the giver and the receiver. And a lot of people that are giving, not only they're not concerned by tax, but they are concerned by default, because they want to make sure that their beneficiaries are not hammered with tax unnecessarily. So what do we need to be doing when we have a trust? First of all, and that's the cornerstone, a trust must be filed and must be declared. So whether it's been executed or not, if you, father, mother, grandfather, or great-grandfather, put you as a beneficiary or co-beneficiary of a trust, it must be declared once a year to the tax authorities in France. It's like having a foreign bank account, put it this way. In France, we don't need to know how much you have in there. We just need to know the basic information. And that's what the trust declaration needs to be done. There are two types of declaration. The first one is an event-driven. So an event-driven is you basically change ownership, you added new assets. Once you arrive in France and you have a trust and the France doesn't know about it, so the first year you need to be doing it. So that's what I call event-driven. And if nothing happened in the trust, then every year you basically have to declare the fact that you hold a trust. When, as you can see here, June 15 is usually the deadline. You have there the forms that must be filled out. You have the address that must be filled out. And by the way, is the address for all the tax center when we talk about non-residents or foreign things. So it's important address to know of. The wealth tax. We talked about initially about the wealth tax. The wealth tax is basically when you have more than 1.3 millions of assets. Those assets can be French or worldwide, by the way, right? We talked about it earlier in the wealth tax. After 5 years being in France, we add your assets located into the US as part of your patrimony in France, and then you may be subject to wealth tax. So if you have a trust you're a beneficiary of a trust. That means at some point you will receive the content of the trust. And that is basically changing the level of your wealth tax. All right, so that basically sums up about the trust. I wanted to take advantage of these last few minutes to talk about us. What do we do? Who we are? You know, you can see here a little picture on the right and the left. What do we do? We help out individuals and corporations to basically operate fully in France or abroad, because we have offices in France and the US. So if you meet any of the requirements here of the necessary tasks, we'll be around to assist you with all of your business needs. Okay. I also wanted to take advantage here to put in the questions, but before we go and open the session for the last few minutes we have for questions, and again, once again, apologies for the glitch earlier. I just also wanted to show you here that I put in some of the sources of everything I just told you earlier. There are obviously way more sources, but those are the main ones here. And before we open up to the Q&A, I wanted to thank you for your time. If you need a copy of this webinar and the slides and so on, I'll be delighted to share that with you whenever you need, by just putting, send us an email and hopefully a nice, Google review feedback. It's always cute and nice and always appreciated. With no further ado, I'm just going to go back to the questions here. As I said, there was 17 questions, but perhaps some folks have specific questions that they want to talk about now, and then I'll try to answer as much as I can your answers. Any questions for me at this point?
I have a question, please, regarding your consultancy fees. If we wish to get help from you and your company, how do you charge?
Sure. So I usually charge, first of all, we usually offer a 15 minutes free consultation. So if you want more and can't get enough of our conversation, we charge a flat fee of 300 euros for the hour. And it's pro rata if we don't go to the hour.
Fantastic. Thank you very much.
I actually have a question. It was the first question that was on that list. We are tax resident in France, and we do not have children. We have family members, 2 in the US and 3 in France. So 3 are French and 2 are US, that are nephews and nieces that we would want to leave our assets to. And they're more of an advantage to be leaving it then maybe to the siblings, and then they can put it on down the line rather than to the nieces and nephews.
Well, if you go back here to the table that I have put it here, you can see that the brothers and sisters have a lower tax rate than if we're talking about non-family members. So unfortunately, the nephews and nieces are not necessarily laid out here. So if you have the possibility to elect as a preference between your nieces and nephews and versus your brothers and sisters, obviously brothers and sisters, as you can see, are less, 45% versus 60%.
Right, and that's the taxation versus if we do something with a donation.
Right, correct. Right.
Okay.
And don't forget, all of that is applied upon passing of someone. So I wish all of us a long life until 120 years, as we say, but it's important to take advantage of the donation system that is currently in place if you reside in France. So do not hesitate to open up an SCI, for example, because I know a lot of questions were around, what do? I have an asset, I want to buy a property. Well, why don't you open An SCI, which is a type of corporation in France dedicated for family real estate. And you could put your children, grandchildren with you so that from the get-go, they are within the corporate structure. And from there, you can basically transmit your patrimony more easily to your children or to your family. I have a question here online, and then maybe the next one can prepare his or her questions, and I'm just going to read it out loud. I am a U.S. fiscal resident with a house in France. So by default, you are what we call a non-French resident. How can I donate my house located in France to one of my children, U.S. resident, while minimizing tax implications for him or her? Well, it's a good question, and there are a couple answers. First of all, because the asset is located in France, I'm sure everybody understood that, despite the little break where we had, that if you are a non-French resident, but you have assets in France, they will be subject to French tax or French inheritance tax. Now, there are multiple ways to do it. First of all, you have the donations thresholds that will be available for you. So if the house is worth less than 100,000 euros, then you're covered with it. If you have 2 children, it's 200,000 euros. And if the house is combinedly owned by you and your spouse, and it's 400,000 euros. So might be covering the value of the house. But if it's not your case, you can definitely, put the house under, partially your name and their name, so that upon passing, the partnership agreement that you could set up says that all of the shares go directly to them and not to you. In that way, like an SCI, which is exactly corporate structure I mentioned earlier, that will allow you to avoid inheritance tax. And that's why a lot of people do SCI. I think another question. I've been in contact with somebody who were writing will and asking him about receiving inheritance from a U.S. domiciled parents with only U.S.-based asset. He assured me that even after being in France for 6 years, there will not be any tax owed to France. I questioned him about it, and he directed me to a notaire, and he said, again, no tax will be owed, and he could be sort of, okay, can you confirm that this is accurate information? It's hard to find a question. So let's start again the question. The question is, you're receiving inheritance from the US, okay? So let's say my father is in the US, passes away, and he provides me inheritance. And in this inheritance, it's 100% US based, right? So I clearly answered that question earlier that by default, if we look at the civil tax, inheritance tax rules, then you should have been taxed as well here because you're residing in France. But given there is a protection to the double tax treaty, then you will not be taxed because the Article 12 of the tax treaty between France and the US states that given that you have 2 worlds connected one to the other, you're fiscal resident of France on one leg, and on the other leg, you're inheriting US source assets, then basically the tax is paid wherever the asset is located, okay? So basically, I'm giving you the exact answer with more precision that is tying out with whoever you dealt with and confirmed whatever I just told you. Moving on to the next question. I'm a US citizen. If I pass away as a French resident and I have an IRA and leave it to my son, US citizen and resident with French tax inheritance. We talked about that earlier, Paul. We said that basically same thing that just the question before. If the asset, whether it's physical or non-physical, is located in the US will want to tax that and not France, unless your son resides in France. Any other questions?
Yes, I have a question, please. My family are we're all tax residents here in France. Myself and my 2 boys have US and European citizenship. I'm just looking at your slide that's right here, where you talk about the heirs in direct line. It was my understanding that if myself and my wife should die, that the inheritance would go only to our children and not brothers and sisters. Is that correct?
Correct. Well, yes and no. Well, first of all, what the table here, what it shows possibilities. So if you elect to give to your brothers and sisters, it shows basically in the example before, somebody didn't have any direct heirs, it shows basically the tax rates to be applicable. So it's not because it's presented here that it shows the different reference lines and the different rates. So that's one thing. Second, it is true that in France, by default, we will prefer to give the money to the family, direct family, which is the surviving spouse and the kids. And if the surviving spouse is not basically there, when passes away as well, then it will go to the kids. Now,
okay.
The kids cannot get 100% because a deceased person can say, you know, I want to give 50% to my two children, so they will get something, and the remaining 50% can be given to whoever you want. Your kids cannot be completely excluded from inheritance in France, and that's basically what the law says in France.
Okay, it's actually the brothers and sisters that I would like to exclude. And a second follow-up question is, can that be specified in a French will that I want my inheritance to go only to my children?
So by default, it will go to your children unless you precise it before that you want it to be split up between your children and somebody else. Okay, that's by default. Now, in order to avoid, as you can see, confusing situation, that is why I said earlier, having a French will, even written in English, that's fine. It could be easily translated. Either you prepare it yourself or you drop it off to your notaire will be the best route to avoid this confusing situation.
Okay, thank you so much.
So I have a question here on the taxable portion. If here gets 1 million euros, he pays 400,000 euros, or is there a tax on the 400,000 euros? So if the here it gets 400,000 euros, as you can see here, the table shown in my page will be applied. Okay, so that means the 400, well, it will be a combination of all those things. So the first 8,000 will be 5%, then 10, then 15, and so on, until we get to the 1 million euros of money that he or she received. Now, one thing I didn't tell you, if the 15 years prior to the passing of that person, the 100,000 euros exemption allowance were not given to that person, that children, then the child gets automatic 100,000 euros first, right? So the million euros becomes 900,000 euros as a base. And then from there, we calculate the numbers shown on the screen here.
In the situation where the inheritance is, for example, a house worth $500,000, for example, would two children both be taxed at the $500,000 tax rate, or would it be taxed at the between 15,932 and 552, or so to say 250,000 each?
So I'm not sure what you're saying, but let's say you have $1 million that you want to split up 50-50 to your two children. So each of them will be basically paying their portion of it. So children number one is going to pay whatever it comes down to 500 he receives. So as I said, the first 8, 5%, the first 12, then from 8 to 12,000 euros, 10%, and we calculate all of that up until we arrive to his share, that is 500,000 euros, and he has to pay that.
Okay, yes, that was actually my question, whether they would be paying for the full 1 million or for their share of that 1 million, which is 500,000.
And it is often the case when there are settlement of that one of the child does not have the money to pay taxes. So the other child buys his share in order for the other child not to pay the taxes, because the taxes are due from him whether he likes it or not. So he has to make a decision at some point. If he does not want the donation, then the donation has to be given away to somebody else. Otherwise, it's just chasing him or her.
Okay, so it makes good sense, I would imagine, to make sure that you have enough money to cover the death taxes in France.
Right, right. So the good inheritance, what they do, people, is they put aside money substantially enough so that the kids can have liquidity to face the tax duties or tax rights to pay. Otherwise, you're stuck with a bunch of assets that you cannot take because you don't have the means to pay the taxes for it.
Sure, yeah, I get that. That makes perfect sense. The big question is where to put those that liquidity without having to pay.
So you come
taxes
to
on
me.
top of it.
You come to me, I'll give you a consultation and I'll tell you how to put 300,000 euros for your children for free.
Okay, absolutely. I'm going to be in touch. Thank you so much.
Yeah, I can't disclose everything today, otherwise it's not fair. But I'm going to address the last question. Is it possible to include in the will a stipulation that in any inheritance tax my children would owe should be paid out of my assets? Yes, correct. Well, we just talked about it. If you have physical assets and you don't have any cash assets to give to your children, then you can say, you know, guys, I have 5 buildings. If you can't pay the taxes on the 5 buildings here, sell 1 building and use that money to pay off the rest. Or you could say, I have 3 buildings there and another chunk of cash for you guys. You know, it's okay to use the cash and pay, you know, the relevant taxes. That's basically how to do it. And if you want to avoid possibilities like that, as I said, there are alternative solutions that we can talk about it. All right. So with that, are there any other questions?
One very last question. What is a typical notaire fee for a will?
It's a great question that nobody will ever able to address, because there are what they call a barème, a threshold that gives indication. But some notaire, you know, are going to like talking to you forever. You know, they're going to be hourly rate. But I would say if you want a good will to be done correctly, it's probably between 3,000 to 5,000 euros.
Okay. All right. Thank you very much.
All right. So with that, I'm going to conclude here. So sorry about, again, the glitch earlier today. And if you need anything, you can come back to me. Brenda, thank you very much for everything you've done to set it up, this meeting. Very lovely of you guys. And as I said before year end, there will be other webinars on French taxes. So be sure to be connected to Brenda, to me on Facebook, or onto our website. And thank you very much. And we'll be talking to you very soon. Bye-bye, everyone.
Thanks.
Thanks again, huh?